So when you look at foreclosures right now, you see that it's like 3.7%, which is lower than before the pandemic. We're getting there. We're almost there at the 2019 level, but 2019 wasn't that of a big foreclosure year either. So foreclosure level has been kind of low comparatively. My name is Nune. This is Boston Area Homes, and if you are interested in buying or selling in Massachusetts, please reach out to me. I would be happy to give you a 30-minute free consultation or to help you do that transaction. And by the way, I have buyers and sellers guide and also relocation guide, so download them for free from the description below. The strength of the loans that we had, the lenders were very careful, and it wasn't like in 2008 there were like no funky loans. It's much better. So people have equity in their homes. Besides, the mortgages being more solid, people have equity in their houses. Actually, $31 trillion of home equity are in the homeowners' pockets. So we have the first-time home buyers in a pretty bad situation right now, because the owners who have the first-time homes are reluctant to move, to upsize to a bigger house, even though they had a new child or something happened. They want to live in a bigger space. They cannot do that because 70% of homeowners have less than 4% rate on their mortgage. So they're thinking, if I sell my house, I have to buy a house that is 6%, 7% interest rate, and everybody's waiting to see what's going to happen. Now, lots of scary headlines told us it's going to be price drops like crazy, foreclosures like crazy. Well, it's January 2024. We haven't seen any of it. The foreclosure level, as I said, is low. People still have equity in their houses. And if you are in a situation where you lost your job or you have medical bills you cannot pay, please connect with an agent who can help you sell it, and maybe you can walk away with money in your pocket. No need for foreclosure. So there's a lot of difference between 2008 and 2023, 24. I've been saying this from the beginning, and a lot of people would argue with me on my channel and say, no, you don't know, it's going to be the worst, the worst, the worst. Well, I feel like it's happening, but the correction is going to happen very slowly. And there are reasons why the prices are not dropping, and that's the shortage of inventory for several reasons. And I talked about this in my previous videos many times, but builders cannot build us out of this situation. We've been underbuilding for a decade. It's going to be some other way. So it's going to be wages growing more, and the wages have been growing pretty nicely, but they need to grow a little more. The more starts of new houses, actually a lot of new buildings coming on the market, and my buyers love the new built houses, especially when they're coming from different states. And the builders are okay with giving you credits for buying down points, for doing all kinds of creative stuff so they can sell their inventory. Right now, if you ask me, is this a good time for me to buy? I would say yes. Because what will happen when the interest rates go lower? Right now, they're like in the 6s, 6.5, 6.7, depending on the lender and depending on your situation. What happens if it goes to low 6s? What happens if it goes to high 5s? Of course, all the millennials that were sitting on the sidelines waiting for the prices to go down, the first-time home buyers, they're gonna enter back into the market. All the people who are sitting because they cannot move, they think I have a low rate, I don't want to get a high rate, they are gonna sell and try to move. So it's gonna be very active market and might be competitive again. If you are thinking you want to buy, I would buy now and hopefully refinance later. My prediction is inflation is slowly going down and the interest rate goes down. You might see like mid 5s by 2025. At that point you can refinance, but again, what will happen when the interest rates are that low? The pent-up demand is still there and people are going to want to buy which creates a lot of demand, which creates possibly multiple offer situations and the prices going up again. So that low inventory situation, which keeps the prices high, is not going to be resolved in 1 to 2 years. It's going to take a while, maybe 5 years, who knows. Right now we have 3 months supply of inventory. In 2008, for comparison, there was 13 months of inventory. So it was basically a very strong buyer's market. But in 2024, we should see increase in the volume of sales, how many houses are sold. We will see some price growth in 2024, not as aggressive as during the pandemic, but we'll see some increase in the price growth. So market is poised for recovery, but it's gonna be a slow one. Another interesting fact, the first-time home buyer age has gone up. So it used to be, with lower prices, people could buy a house in their mid-30s. And now, they're going to be waiting much longer before they can afford. So affordability of houses is not just the purchase price and the closing fees. Affordability is also how much it will cost you to keep the house. So you're talking about repairs, about taxes, about insurance. In some states, you cannot even get on insurance. It's very difficult, and you have to pay a huge amount. Taxes have gone up because the home prices have gone up. And also the repairs, for the repairs, you need a handyman or you need a contractor. All those expenses have gone up considerably. So a lot of experts think that the rates have peaked. So from now on, they're gonna go down. Let's hope so. If you're interested in Massachusetts and want to move to Massachusetts, reach out to me. I would be happy to help you.